Hello, and welcome back to AOPA's Pilot Information Center live stream webinar series. Our topic for this episode is leasing to an FBO. I'm Ferdi Mack with the Pilot Information Center. Thanks so much for joining us. This is episode 3 of our 3-part series this year on aircraft ownership. Part 1 was on co-ownership back in May, and in July we covered LLCs in Part 2. In this episode, we will cover aircraft leaseback, in particular the legal and tax considerations. This webinar is brought to you by AOPA's Pilot Protection Services. For more information on how we can provide you with aviation-related legal and medical assistance, you can visit the PPS website at www.aopa.org/pps. Before we get started, I'd like to remind our viewers that you can subscribe to our AOPA YouTube channel by using the red subscribe button below the video. Also, during the live presentation this evening, you can send us your questions in the chat box just to the right of the video. We will answer the most popular questions at the end of this hour-long presentation. Also, if you're not watching this live, please feel free to contact us with your questions at 800-872-2672. That's 800-USA-AOPA, Monday through Friday, 8:30 a.m. to 6 p.m. Eastern Time. Or you can email us at pilotassist@aopa.org. Joining me again today is Ray Speciale. Ray is one of AOPA's Pilot Protection Services staff attorneys, as well as a CPA and a CFII, which I neglected to mention last time. I apologize for that. And Ray is well versed in applying all of those skill sets simultaneously in the aviation domain. Welcome back, Ray.
Thanks a lot, Ferdi. Good evening, everybody.
Great to see you. All right, so Ray, let's get started. So I, the other day, was scratching my head after talking to a friend of mine, or maybe the owner of the flight school where I rent, and was thinking maybe I already own an airplane, maybe I don't. But I think I've come up with a way to not only reduce my cost of flying, but maybe I'm the first one to figure out maybe I can make money with this depreciable asset. I'm going to lease it out, have other people pay to fly it. That's this whole lease back idea, right? So why don't we get started with some of the highlights of how we're going to try to explain this lease back deal to our members this evening.
Sure, and that is going to be the focus of this evening's discussion. And just to make sure that everybody's straight on the terminology, when we talk about a lease back, it may not be technically correct in the sense that a lease back really means that you're purchasing an asset like an airplane and then you're going ahead and actually leasing it back to whoever sold it to you for various reasons. In the case that we're discussing this evening, we're really talking about specifically a lease of an aircraft to an FBO or flight school with the intention, as Ferdi said, of generating some revenue. The whole point of this 3-part series has been how can an aircraft owner go about trying to defray some of their expenses of aircraft ownership. And this is really the third of that 3-part series, and this is a very viable approach, but there's a lot to it, and that's what I intend to go over tonight with everyone.
And you've already done a great job of taking my semi-hyperbolic language of make money to generate income, right. And you've also brought in the much more common parlance of we're going to find a way to defray the costs of ownership potentially.
And that is a very valid reason to do this, but and we'll talk about this a little bit later, you've got to really be in this as a business. It's got to be looked at as a business. And the way that I want to approach this tonight, and this is really the outline of the discussion, is going to be to first talk a little bit about some of the typical pros and cons of a leaseback. And again, when we use the term leaseback, we're talking specifically about an aircraft that's being leased to a flight school or an FBO, or through a flight school or FBO. Once we do that, I'd like to take a look then, and this is important, at the actual agreement that you would enter into with the flight school or FBO. That's an important part of the deal, right? That's the arrangement. We're also going to take a look, and this will take a little bit of time, at some of the income tax issues. That is often an important consideration, and folks have to be mindful of that before they get started so that they can fully understand what this deal may bring to them. We'll also shift into a little bit related to sales and use tax issues, because that does become a factor as well. Finally, I'll try to reflect on this with you. Maybe at that point we may have some questions streaming in. Just some general reflections on what you should be considering from a 30,000-foot view as you think about whether or not this is going to be for you. And then finally, with time permitted, we'll try to get to some of the bigger questions that are coming up. So let's go ahead and get started. With respect to advantages of a leaseback, as I said a little bit earlier, one of the key advantages is this ability to defray and share the cost of aircraft ownership. If you think about it, and what we will often see is an individual aircraft owner might not really be able to fully utilize their aircraft. If they're flying at 50, 60 hours, which frankly is what I often see, they may be thinking, well, maybe there's a way that I can still get to use it, but I can also defray some of my expenses by having others use it and pay for that use as well. So that is, in fact, one of the primary reasons people would get into a leaseback. And another good aspect of it, and this really ties into somebody getting low utilization of the aircraft, is that I'm no A&P mechanic, but what I hear more and more from mechanics is, it's nice to get that aircraft out of the hangar, away from the tie down, get it out, get it flying. It's better for the machine.
Some of the engines that I've seen opened up at overhaul time at some of the places where I've worked, where those engines have run their 2,000-hour lifespan in 3, 4, 5 years, those are some of the nicest, cleanest looking engines inside. You might think they've been run hard and run all the time, and as a result, they're going to look more worn, when in reality, they're better taken care of and they require less replacement parts at time of overhaul.
That's right. It is a factor and something that people will often need to consider as they go through this, that the greater use may actually be better for that engine, better for the aircraft.
Absolutely.
Now, some of the negatives, right, that you got to be aware of as you go into this, and they do tie very directly to the positives, is, the flip side is you may not be able to use the airplane anytime you want. That is a negative, right? There's going to be limitations to that, because if you're really running this as a business, other folks are going to have the same opportunity to use it as you might, and that will limit the availability of the aircraft to you. Greater aircraft use can be a positive, as I just said, but it can also be a negative. And often the negative when it comes to leasebacks that I hear about anyway, and I'm sure everybody's got their stories, is just some of the cosmetic things. Renters who don't take care to clean out the aircraft. Sometimes it's more than just cosmetics. Sometimes, it's hard landings, other things that might happen, especially if they're training primary students on your aircraft. So there is that flip side that we can't ignore. It can be a negative in some instances. And finally, and there are more cons and there are more pluses, but one other is that for better or for worse, when you get involved in one of these things, you got to deal with people like me, right? You got to hire often a lawyer, an accountant to get this up and running, and often you'll need a CPA on an annual basis to keep you in compliance, right? To file tax returns, to at least assist you with this part of your tax return. So that's a cost that needs to be factored in as well. And as you get going with this, you can't ignore it. So let's take a look now, though, at some of the ingredients to a good deal, right? And when I say a good deal, I mean one that's a solid deal that is as clearly laid out as possible between you as an aircraft owner and a flight school or FBO. So some of the top line things, some of the things that you have to first of all think about is, what is the deal? How does this work? And this slide really reviews, again, from a very high level, what's going on in one of these aircraft leaseback arrangements. Typically, you've got a FBO or flight school, and usually they don't want to buy their own aircraft. For better or for worse, the model that creates less risk for them is going to be a leaseback model where they're able to make use of someone else's asset, right?
They don't have to have skin in the game.
Right. It is often difficult for them to raise enough capital or to put that or make that part of their business model, right? So they're going to prefer this model, and in many cases it'll work for both parties. So first of all, it does typically involve that kind of an enterprise. You're going to also be looking at a deal where there's a revenue split. You could see that as the next point on the slide, where normally the FBO or flight school, as a result of this, is going to probably retain about 20%. That's usually what I see. Sometimes we see 25%. I'm sure there's lots of other deals out there, but that is by far and away the most common kind of arrangement we see, where the FBO or flight school is going to retain 20% of the gross revenue. The rest of it, the remainder 80%, for the sake of this discussion, will pass to the aircraft owner. Mm-hmm. And then finally, and this is a big item, right? Your 80% is going to be used to pay for some of the big items that typically will come up with any aircraft, right? Maintenance, hangar, insurance, tie down, whatever normal costs would be associated with ownership, that's what's going to come out of the 80%. Now, what will also happen is normally you will get either a check at the end of each month that will include the remainder of that 80% after all of those expenses have been paid, or it is possible that the expenses have exceeded the revenue and you will be writing a check.
Your airplane might not be flying as much in the winter, and what if that happens to be when your phase 3 or annual inspection falls, or even 100-hour?
That's exactly right, and that's one of the reasons why, and I'll probably mention this more than once tonight, if you're thinking of doing this because you are not going to be able to afford the debt service on an airplane,
Otherwise.
Yeah, stop. Don't do it. All right, this is not going to be for you. You want to be able to know that you can cover debt service, you can cover the other expenses related to this aircraft, both fixed and variable, without the need for the leasing revenue.
Right, so maybe it's February and maybe it snowed all month.
It happens.
You've got no variable costs associated with the aircraft because it hasn't moved, but you've still got your monthly insurance. You've still got you to pay the note on the aircraft, and you know,
those fixed costs don't go away.
The tie down, or you know, however you're physically locating it, those 3 fixed costs alone, you know, that there's a 4-figure check you're going to have to write with no income that month to offset
right,
it.
Those costs are going to be there. So you have to be prepared for that. And again, it's not a good idea to get involved in one of these if that's going to be your way to pay down debt service and pay for all these other expenses. It typically won't work. Mm-hmm. Now, that's the sort of higher level look at what the deal is going to be. Now I just want to spend a little bit of time going through what I'll call the key ingredients to a leaseback agreement, the agreement between you and that FBO or flight school. Mm-hmm. And I'm certainly not covering every single one of the points that would need to be covered. I'm just trying to highlight some of the main points. Some of these might seem pretty obvious, but I want to make sure that we're covering it. First of all, you want to be able to identify the aircraft and the aircraft owner, right? If it's an LLC, you'll want to say the LLC that's running into the deal with the flight school, or FBO, and you want to clearly identify the aircraft. The next one is actually more important than you may think, the term and termination. I find this often to be the most important aspect of the deal. With respect to the term, you're usually going to see a year deal, a 12-month deal, but that means this is how long the revenue sharing and all the other aspects of this agreement are going to go. The termination clause, in my mind, is actually even more important. You want to know what it's going to take. I hate to say this because you're just starting the deal, right? But you want to know what it's going to take to get out of this deal. And the way that I like to look at this is the easier to get out, actually, for both parties, the better. I have found over the years, and this is just my observation, you may hear other opinions on it, but that if you've got for instance, a nice 30-day out no cause. You can get out for any reason. The FBO can get out for any reason. I think that's typically going to be better for both parties. You want that ability to move in and out, to move out of the agreement with a lot less fuss. So anything more than 30 days, you better think about. And you better think about what's going to happen if things are not going the way you would like them to go.
So this was actually enlightening to me, never having been part of a leaseback arrangement before. I love the comfort that this idea provides as far as the termination clause. On the term side, however, let's say things are going well. We get to, let's say, month 11 of a 12-month term. What steps have to be taken in order to renew? Do we just print out a new copy of the same form if we find it agreeable, put new dates on it and sign it, or is there more to it?
It actually can be as simple as having a clause in the agreement that says that if you don't do anything, it will automatically renew in a month, on a month-by-month basis, right?
Okay.
And maybe the terms of the agreement will go on for another year. So it is something that needs to be attended to, because it could be that it terminates and then whoop, you got to go ahead and put together a new agreement. But usually I see an auto renewal in there. Makes it a little bit easier, it creates a little bit less stress. But again, the termination, the ability to get out in an easy way without any acrimony, if there's no fault, right, that needs to be attached, that's usually the best way to go.
And you had also mentioned in our rehearsal the idea that the agreement would attach to perhaps not just on the FBO side a particular company, but maybe a particular group of people in that company, so that if the...
well, we're going to talk about that when we get to leasing and subletting it
Great.
Or signing the agreement,
Great.
because there it does become important. You know who you're dealing with. You might be dealing with a corporation that is running that FBO or flight school, but you're really dealing with the people who own it. And so we'll get to that if, in case the FBO or flight school should change hands, what's going to happen if they are looking to assign your lease,
Okay,
right,
great.
to the new owner. We'll talk about that in a few moments. You also want to deal with aircraft use. You may not want your aircraft used on a grass strip or shorter strips or gravel strips. You may want to confine its use to certain geographic areas. The insurance policy, we'll talk about how that works a little bit later, is going to also perhaps have some constraints there. So that needs to be addressed. You also will want to lay something in there about your use of the plane. This is my own feeling about it, my own experience with it, but you want to draft this up with the thought in mind that somebody's going to be looking at this someday. And that somebody could be, for instance, an IRS auditor, right? And my own preference, if you want to really be able to treat this and say that you're treating this as a business, and you'll see the importance of this a little later, it's been my view that you get the same terms of use, you get the same kind of scheduling preferences as anybody else gets. You're just another renter. I know a lot of you may not agree with that. That's just my own experience. I've always felt that that works best. You're going to pay the same amount. You're going to get on the schedule the same way as any other renter. And I found that to be the best way to do it.
So not only does the owner not necessarily have any scheduling priority or preference explicitly stated or implicitly given, but also they don't have any of the scheduling rights. You know, they're not the scheduling authority.
Often they're not anyway, right? It's the schedule is in the hands of the FBO or flight school. There may be some rare instances where they do deal with that directly. But tonight, with the time we've got, I'm only talking about the typical case where the school is the one that handles the scheduling. Again, my opinion, my preference has been to have owner use laid out in a way that it doesn't necessarily give any great preference to the owner, none above what any other renter might get. Okay. Couple other things that you might want to include in there that I'd like to see in some of them. Sometimes these FBOs or flight schools might have several locations. You want to make sure that aircraft basing is laid out very clearly there. Which airport, might even be that there's a particular hangar you're using that you want to lay out there in the agreement as well. The revenue sharing percentages need to be clearly stated in this agreement. Again, normally they're 80-20, but depending on the deal, they could be slightly different than that. Maintenance, this could be important. You know, there are times when the FBO or flight school may have their own shop that they'd like it to go to, and they may give you a better deal when you go there, some kind of a discount. But there may be times when you might want to override them. You might want certain work done somewhere that you have chosen, that you have authorized. So in this particular section, you might want to say something like, look, if the work is going to be more than X dollars, I want to be notified first, and I have to give my written permission or my verbal permission in order for the work to be done. That's something that protects your interest and to some degree even protects the FBO, so that they're not blindsided when you say, oh, I didn't authorize that, I didn't want you to do that.
Now what do we do? Yeah.
Now what do we do? Right. That is often the cause of friction, so that to the extent possible needs to be laid out as carefully as possible.
And pardon me, interestingly enough, when it comes to maintenance and deciding where the work should be done, we're in an interesting era now. AOPA has done some maintenance investigative work regarding some of the newer ADSB installations. Some of the more complicated install jobs can or should be performed by an actual radio shop, but some of the other more simple installs that are designed to be done with minimally invasive techniques can be done by an A&P at your regular mechanic shop, as opposed to going to a radio shop. So right there, that's a good example of, right now there's a crossroads for aircraft owners where they could be surprised if their shop at their FBO or flight school attempted to do the ADSB install, where the owner may have had a misconceived notion or an expectation that was accurate that it should have gone to a radio shop. So that I could see that playing out right now. Point being, there are certainly cases where miscommunication or misunderstanding there, out of not being codified in the leaseback agreement,
you just don't want that.
It can cause some heartburn. Yep.
And these agreements will not cover everything, and you want to try to cover as much as you can, but it's always a good idea to lay out the general framework, and something like that can be avoided without too much trouble. A couple of other things that you might want to see in the agreement, again, I'll call them sort of key ingredients. Besides the insurance is another one. That's a big one. More often than not, what's going to happen is that the aircraft is going to be placed on a commercial policy that is part of the FBO or flight school's fleet policy. So that's going to be important. You're going to want to check what kinds of limits they've got, what kind of sub-limits are on that policy. You're going to want to make sure you individually and your LLC or whatever entity you might have it in are named as insured. On another note, you want to make sure, if you can, that the FBO or flight school is insisting and checking on the renters to make sure that they have gone ahead and procured some kind of rental insurance, because that will be most helpful in the unfortunate case where there's an accident, there's a deductible, and that renter needs to pay for the damage that was done.
Through the deductible.
That's right, exactly. Right. And so those renters' policies are something that a lot of flight schools and FBOs will insist on. You may want to insist that they insist on it in your agreement. Sometimes it's hard to force compliance with that, but it's certainly worth a discussion. And it's certainly important for you to understand that there are deductibles on those policies, and you want to make sure that your exposure is understood.
Right. So what's going to happen there? We have an unfortunate landing situation. The aircraft is damaged. $50,000 of damage needs to be paid. Work needs to be paid out, and will be paid out by the insurance company. The insurance company has a policy in place with the owner. They're ready and willing to pay that that $50,000 amount to make the aircraft operable again. But there was a deductible, say $5,000. But the insurance company wants that deductible before they'll pay the claim. The insurance company starts looking for the deductible to be paid. Who do they end up coming to? Our hapless renter, who was the one who actually performed the act of piloting in question that caused this whole scenario in the first place. And if that renter had secured an unowned renter's policy for, I think they're going at the base rates these days for around $200 a year, depending on
They're pretty inexpensive.
Right. That would have covered that $5,000 deductible coverage potentially that otherwise may have to come out of the renter's pocket.
Right, and if you're the owner, you do not want to have to go after the renter for that. It's not easy, and it's a lot better to make sure they've got a way of funding that kind of exposure early on.
Right.
So that's something else that can be discussed with the FBO or flight school to make sure that you've got as much coverage as possible.
I know it's a little bit down the weeds as far as, now we're talking about the renter's interface to this leaseback agreement, but it's worth talking about.
Oh, it
so
is.
that you can understand from the aircraft owner's perspective, as the one who's providing this leaseback aircraft, what is at the other end of that pipeline.
Exactly. Some of the other things, last few items on the actual document itself, and this seems very obvious, but you want to make sure that you are clearly stating that this is your aircraft, right, or your LLC's aircraft, or whatever kind of entity you might have out there, and that the FBO or flight school may not do anything that will cause a lien or an encumbrance to be placed on your aircraft, right? That should go without saying, but you want to make sure, I think, that it's certainly mentioned in the agreement. Ferdi, this is what you were mentioning a little bit earlier, assignments and subleases. At the end of the day, you're dealing with people at the other end of this, even though it might be an entity that you're really working with from a legal perspective. So if that flight school or FBO changes hands, you may not want them to be able to just go ahead and assign that lease or sublease your leaseback arrangement to somebody else. And that means writing it into this agreement. And normally what you could say is that if they're going to go ahead and assign the lease to another flight school, or even if the ownership of the current entity changes enough, that could be considered an assignment. And therefore that would require your approval before it can continue. So worth looking at and worth making sure that you're comfortable with that. Finally, sort of the unpleasantries of if there is a dispute, right? You want to make sure that you've got something in there that talks about how you want disputes resolved. Some folks would prefer to bring these kinds of disputes to arbitration. Some will just simply say, if there's any dispute, we're going to bring it to the local circuit court or district court or whatever it might be in your jurisdiction. It may also be worth it to lay something out in there that says the prevailing party will be entitled to attorney fees. You'd be surprised. Sometimes that's a way to suppress the desire to litigate, right? If somebody's thinking that, well, now I'm going to be on the hook for lawyer fees if I'm not the prevailing party. And then finally, you'll also want to mention what will be the governing law, right? What state law will in fact govern the deal. Sometimes this is important, especially if you're not in the same state as the FBO or flight school. So you want to be clear on that so you know which court you're going to, right, if you have to do that eventually, and what state's laws will apply to your particular case.
Get your coffee.
That's right. You're going to need it now because we're about to talk tax.
Double shot.
That's right.
Yep.
All right. So here we go. But this is, as mundane as it might be, it really is an important part of the discussion. I think there are some misconceptions out there about this. But people need to go into leasebacks with their eyes open on the tax, the income tax implications to an aircraft leaseback. So to start things off, we're going to take a look at some tax basics, all right? And this doesn't just apply to leasebacks, this applies to everything. Since about 1986, when they did the last big tax reform and write-up, the IRS has recognized what I'll call 3 buckets of income. And this is important, you'll see in just a little while, because we've got to be able to classify income in order to understand how it's going to be handled. The first bucket is probably the most prevalent. That's where most of us get our income from, right? That's going to be ordinary and earned income. So again, that's the kind of income you get from your business, from salaries, from wages. So that's bucket number one. The second bucket that we're familiar with is what we call portfolio income. And the IRS looks at portfolio income as a separate item. And this would include things like dividend, interest, capital gains. The third bucket, which is often something that needs to be thought about in the term when you're in the context of an aircraft leaseback, is passive income. And this is typically attributed to items like rental income, and guess what we're talking about, right? Leases, and activities where someone doesn't materially participate. And we'll talk about what that means in a little while. But specifically, this passive income bucket needs to be looked at carefully in this context. And why? Well, there's a couple of rules we need to talk about now that do relate specifically, they relate to a larger context of things, but in the context of aircraft leasebacks, they're important. And the first rule is really the at-risk rule. And what this basically says is that your losses on any activity can exceed the amounts that you are at risk for. And what do we mean by at risk? Well, I'm going to oversimplify it a little bit, but it could be as simple as the amount that you put into the initial investment. So for instance, if you bought $100,000 Cessna 172 to put on the flight line at the local FBO or flight school, and you paid cash for that 172, you are at risk for $100,000. That's your at-risk amount to get started. If you add to that over time with avionics or other improvements, you can add to your at-risk. Mm-hmm. The second rule, and this is one that really needs to be understood, is that if we're talking about passive activities and rental activities, and we'll see this in a little while, come into play here, passive losses can't be used to offset ordinary or portfolio income. And this comes from Internal Revenue Code, Section 469, if there's any CPAs or attorneys listening out there. But the key here is you can't use passive losses to offset buckets 1 and 2. And then finally, and this one to some degree is a kicker, if you're engaged in a rental activity, it is presumed to be a passive activity unless certain exceptions apply. So as you start processing this, you should be thinking, oh my gosh, it may not be so easy to deduct losses from this activity if I in fact run into losses. Because if they're passive losses, by the very nature of the fact that this is a rental activity, and I've got these losses, I can't offset my ordinary income or my portfolio income with this. I'd need other passive activities before I could go ahead and use those losses. And you'd be right. Mm-hmm. That's the fundamental issue that you need to deal with as you consider the tax consequences of an aircraft leaseback. All right, so let's get into it a little bit further, as if that wasn't enough, all right? So there are certain ways that you can, under the regs, okay, where a rental activity could be treated as non-passive, all right? So here we go. The first of these exceptions is what I'll call the 7-day. And by the way, these are not all the exceptions that are out there. These are just some of the more common ones that might work. And I'll say right from the start, they generally don't work.
So not necessarily tried and true,
but these, they've been tried, or right. And so I want to go over them with you just to lay the groundwork for this. But the first one is the 7-day exception, we'll call it. And basically what it means is that customer use, in this case of your aircraft, is typically 7 days or less, which basically means people are using it on a short-term basis. And you could be thinking, oh, that's great. The customers who use this aircraft are typically using it for an hour or two at a time, right? They're logging in the hops time and moving on, and another customer comes in. So that's the first exception. The next exception is, another test that's really a defined business hour test. If you think about it, that has some attraction too, right? The flight school or FBO is keeping the aircraft at its place of business. People can use it during those defined business hours. So again, maybe this has some appeal. Maybe this is a way to deal with the rental presumption. We'll talk about that. Keep that in mind. That one has some potential. Your customers or the customers using the aircraft are getting it during defined business hours. And then finally, there's a catch-all, which I have not yet seen attempted, so I really couldn't comment much on its viability, and that's the facts and circumstances test. But I will say this, for that one, you do need to still have very heavy turnover on the aircraft. Mm-hmm. So what's the problem? You're saying, well, these seem to be workable, right? They seem to be workable because my aircraft is going to be used on a very consistent basis for short-term use, right? We're going to be renting it out for an hour or two at a time. It's going to be there during defined business hours. The problem is defining who is the customer, all right? And what we've got are a couple of cases that have created problems. And they're both published tax court cases. And in both of these cases, the tax court has decided that with leases to a flight school or FBO, under the particular facts and circumstances of these cases, that the customer was not the renter. The customer was the FBO or flight school that was engaged in the business of ultimately leasing it to their customers. So the way the tax court looked at it, in both of these particular cases, the way that they saw it was that you, the aircraft owner, or the aircraft owner in these cases, was actually leasing the aircraft to a flight school or FBO. Their customer was the flight school or FBO that was leasing the aircraft for, let's say, the average term of 1 year. Mm-hmm. And that meant that those exceptions we just talked about, the 7-day, the defined business hour, just simply did not apply. And that created the problem for both of those taxpayers in those tax court cases. And those are two published cases. There may be other cases out there that some of you are aware of where it might have gone the small tax court route, but I haven't heard of them, and we'd welcome feedback on that. But right now, those are the two published cases that we're looking at. Now, you might say, well, my gosh, then what happens to the losses that I've had? At the end of the day, there is still some silver lining on that cloud, and the silver lining is, and this is what pops up next here, is that, in fact, those stored up losses that are out there can be used to go ahead and offset any potential future gains that might come when you go ahead and sell the aircraft. I think that might have been a slide back there, but that's, we'll talk about that in a little bit, that in fact, these losses may be used later on upon the sale of the aircraft. Another hurdle you've got to get to, even if you could get over the rental presumption, is going to be the material participation issue.
Yeah, this is where it gets really seemingly creative if you're going to try to get through it.
That's right. And what's going to happen here is you're going to have to actually deal with a couple of issues that, again, are problematic. One, and there are some ways to establish that you are materially participating, but you've got to show, even if you can get past the rental presumption, that you meet these material participation tests. The first way to do this, and this isn't easy, and I actually have not seen anyone do this yet, and I'm sure there's somebody who can do it, but you've got to be able to show that you are participating in this activity 500 hours or more a year. And you've got to be able to show evidence that you did. The other material participation test is what we call the 100-hour test. you've got to be able to show that you've invested 100 hours or more of time in this activity, and there are some very specific types of time that have to be invested, and we'll talk about that a little bit later. But that nobody else, including the folks at the FBO or flight school, are not putting in more than the amount of time that you're putting into this. So that's another hurdle. And then finally, again, I haven't seen it used, facts and circumstances test. That's material participation test 3. Again, there are more material participation tests that would potentially work, but those are the most common, and those are the types that might be the best bets if you're going to be able to do this at all. So you got those 2 tests you've got to get past. One is the presumption that this is a rental activity, and those 2 cases are difficult to get past. And if you can even get past that, you then have to get past the material participation test. And there we've even seen one case, and that's the next slide here. I think it was the Williams case, where the tax court looked at this, and in this particular case, the aircraft owner failed to meet the material participation test because of documentation issues. They did not, according in the opinion of the tax court, properly document their hours in the activity. And as a matter of course, the hours that you're documenting have to be real hands-on activities. I'm overgeneralizing and somewhat dangerous, but it can't be activities that a typical investor or owner would be involved in, like looking at financial statements, looking at the kinds of reports that are being generated by the flight school. That kind of time is typically not going to count. It's going to have to be real hands-on time, which sometimes just doesn't happen with these FBO and flight school leasebacks. So that's something that would have to be carefully analyzed by you and your accountant before you ever got into this, because these tests are not easy to meet. The published cases that we're aware of have not gone the way of the aircraft owner. There are some, and I've seen them, I'll say very well thought out agreements that are not called leases, but the drafters are, very, highly qualified lawyers who try to cast this as a marketing agreement, right? So that all that they're doing is marketing your aircraft to third parties, and those third parties are really your customer.
But it's so easy to poke a hole in that. If you were to turn that model on its head and ask the customer, who are they leasing from? Who are they renting from? Who are they paying to use that aircraft? They don't know the name of the owner,
typically
or
they
never
won't.
met them. They're leasing it from the flight school, whose staff is providing them with the keys and logbooks and facilitating the transaction.
To some degree, that's why I've been a little bit cautious about that, and that's why I've tended to advise the folks I've spoken to that in most cases, and I mean 95 to 99% of the cases I've seen, these arrangements are going to generate, if there are losses, they're going to be passive losses. And a lot of times, don't forget, the losses are going to be generated largely due to the depreciation that's being taken on the aircraft over the years. So what happens if they are passive losses? As I started to say a little bit earlier, not all is lost. Those passive losses can be suspended or stored up indefinitely, as long as you still got the airplane. And then they can be used later on when you go to sell the airplane to help offset any kind of loss, presumably, as I say here, on a depreciated aircraft. So let's go through a solid example. Let's go back to that aircraft that you paid $100,000 for, and you've had it on the line. It's been generating a nice steady cash flow for you, but you have depreciated it and you have had losses over the years. And now the aircraft, and we'll oversimplify a bit, but now we're 6 or 7 years out, it's been depreciated down to zero. You're ready to move out of this business for various reasons, and the aircraft might be sold that many years later with the wear and tear on it for, let's say, $70,000. If that aircraft has been depreciated down to zero, you paid $100,000 for it, but you're going to get $70,000 on the sale, guess what? You've now got a $70,000 ordinary gain. We call that a gain from the recapture of the depreciation. So if that happens and you've treated your losses as passive losses, you can now use those losses to help offset that recapture. And when that comes in, when that kicks in, it could be handy. So again, not all is lost. It's really a timing issue in many cases. But this is a question, if you haven't already figured that out, that's going to need to really be carefully analyzed by you, your tax counsel, your CPA, before you ever get into this. If people call us over at Pilot Protection Services, over at Legal Service Plan, related to aircraft leasebacks, we'll talk to them specifically about their particular case, and then sometimes we'll even get into a discussion with their lawyers and CPAs to see what might work best for them.
Mm-hmm.
So that's the passive activity loss rules. If you haven't had enough of that, there's one more to go.
Oh my gosh.
Yes, and this is the
hurdles.
Yes, the hobby loss rule. A lot of folks have heard of this. This basically is an IRS test, or there's a series of tests that they'll have you look through, or that they will look through if they're ever looking at your case, and you'd prefer that they not. But basically the rule says, look, if you don't have an objective intent to make a profit on this deal, right? If you're just doing this to spin off tax losses, we're going to be watching you. And if you are, we may not allow your deductions. And we're going to disallow them up to the point where you've been generating revenue. So in fact, if the IRS comes in and says, look, this is being run as a hobby because all we ever see are losses from this activity, this is what you're going to have to deal with. There is a presumption that could work in your favor if you're able to show a profit for 3 out of 5 consecutive years. And that's kind of a moving 3 to 5 years as you go out. And the IRS looks at a lot of factors here. I can't go through them all with the time we've got tonight. But generally, you've got to be able to establish that you went into this with a plan, with a well thought out plan, with a plan that maybe you had your CPA or other advisors involved in, where it's clear that you had a reasonable and realistic intent, an objective intent to make a profit on this arrangement. And they'll look at several things in order to test that assertion. And you've got to be ready for this. And they are mostly looking at tax returns. There's no general rule, but they're mostly looking at tax returns where there would be high net income from other sources and then big losses on write-offs from the aircraft.
Building your own tax shelter.
Exactly right. That's what this section was designed to prevent.
Mm-hmm.
So you want to be careful about this one as well.
However, if you were a, shall we say, either a bad or unlucky business person, there's a difference between that and trying to exploit this.
There is that distinction, and I've seen cases where there might have been a terrible year for weather. There might have been an accident that an aircraft was involved in, and the taxpayer was able to push back
mm-hmm.
on the assertion that it was a hobby because of unforeseen circumstances.
Stands to reason, perhaps, if the aircraft is damaged substantially and is down for 6 months or a year.
Right.
You know.
But this was really designed to capture those who might not have had that objective intent.
Sure.
And they have a way of looking at the returns and sorting out returns that might be fruitful for them. Let's put it that way when they start looking at audits.
Oh, right? how colorful.
Yes, right. So you want to be mindful of that, and I'm sure if you're getting into this and talking to your CPA, they're going to be very mindful of it as well. Leaving the income tax issues, there may also be sales and use tax issues. This won't apply everywhere, but I thought it's worth mentioning that in many states, several states, there may be an exemption when folks are purchasing an aircraft for resale. Now you might say, well, look, I'm not purchasing the aircraft for resale. I'm purchasing the plane so that it can be leased out to others. And you're right. But a resale is often defined by state law as a lease. So resale equals lease in this context. So what this might do for you, and again, you need to check on this locally with local tax counsel, is it might allow you to avoid the initial payout of sales or use tax on your aircraft purchase, and then pay it out over time, and that's really the second point on the slide. If you're getting a check from the FBO or flight school for your lease on the aircraft, you might then need to pay over time each time you get one of those checks. So let's say you get a check for $1,000 in a particular month. The sales tax rate in your state is 5%. You might have to write a check for $50, and that would go on and on each month that the aircraft is on lease back. But at the end of the day, it might be helpful to not have to pay it right up front. Mm-hmm. Sometimes even on individual flights, the flight school may have to collect and remit sales tax on individual flights. I know in some states there are exemptions that are available if in fact the aircraft is being used for flight instruction or for flight training purposes, because the state will look at that and say, well, that's really a service that's being provided. It's not just the rental of an aircraft. Mm-hmm. But if you're just renting the aircraft, if the flight school is just renting an aircraft to a pilot who's using it to get from point A to point B, there might be a sales or a sales tax that needs to be applied there.
And that distinction may seem silly, but I think it's New York City now who charges tax or doesn't based on if you buy a cold bagel at a coffee shop versus if they cut it and or put cream cheese on it as prepared food. Prepared food or food off the shelf have different taxation structures, and it's just like you said, here in Maryland, it may still be the case. When I was involved in FBO operations, we did charge tax on the rentals, right, but we did not charge for instructional flights.
And that is, to my knowledge, still the rule here in Maryland, is that if it's being used for flight instructions or flight instruction purposes, that it is exempt because really what's being provided is a service. So probably the best takeaway from this is that a lot of this is very local in nature. You do need that kind of local tax counsel to see if in fact any of these exemptions or rules will apply to you if indeed you're getting involved in a leaseback operation. So,
all right.
So now just some reflections,
yes,
on this, and then maybe some time for questions, we'll see. But first, you've got to be treating this as a business. Again, you don't want to go into this just as a way to help you pay debt service on the aircraft. You want to really go into it with the thought in mind you're going to make some money off this. If nothing else, you're going to have a positive cash flow. Right? In order to do that, you're going to need to find the right FBO or flight school. You need to find one that's busy, that treats its owners well. And how do you find that out? Well, you got to start talking to people. You've got to do your research. You want to see what kind of usage other people are getting, how well the maintenance providers are dealing with owners. There's a lot of things that you're going to have to think about here, and you're going to have to ask questions. Because again, this is a business and you're going into it to make money, and you want your aircraft to be treated properly. You want to be sure that your use of the aircraft is not going to interfere with the ability of this deal to make money. Mm-hmm. That is important. I hate to say it, but again, it goes back to treating this as a business. Your use of it might have to be secondary, and in fact, you're going to have to factor that in as you consider whether or not this is the right kind of deal for you. If you want less users and more time to it, there may be a better way to do it, but the time to think about that is up front. Something else to think about is, have this plan run the numbers before you go out and buy the aircraft. That sounds obvious, but I see so many people who don't do it. And don't just run the numbers on your own. have an objective third party look at this, somebody who maybe does your tax return, somebody who's close and knows the rest of your tax circumstance. So don't do this in isolation from everything else you do in your business world. This is going to be a part of your tax return, a part of your cash flow. So make sure that it's in fact going to work when tied in with everything else that you do.
And that's not just looking for professional advice on your own personal back end. That's also maybe looking to the FBO for their experiential advice on the front end. Namely, you can't assume that, oh, in the winter it'll be slow, but it'll probably fly 50 hours a month. You need to plan for those unexpected weather turns, those long maintenance downs. There's going to be some wide variability in what you might see on a month-to-month basis, year over year. And the FBO,
they've got experience, they've got history.
Should they be willing to do so, might even be able to show you some data. And if it's the kind of FBO you want to work with, they should show you that sort of data.
Right, and if you can get if you have the ability to go out and talk to other owners, that's another place to get some of that data. And finally, you want to get an aircraft, because this is a place where I've seen people fail before, is you want to get an airplane that's going to be the right kind of fit for this leaseback.
You mean for me, the owner, right?
No.
Oh.
You know what I mean, right? This is going to be the right fit for the leaseback.
I want a twin.
Good luck. Right. You want to find one that's going to be flown. You want to find one that's going to get good use. You want to find one that's going to make you money. That's what this is all about. You're in the business of leasing an aircraft to make money. You want one that's going to be used.
And I'd love to give an example. It might not just be make and model, but it might be more than that. PA-28s, Cessna 172s, they're out there. Everyone's flown them, everyone's flying them. They're popular because they're ubiquitous. Regardless of if you prefer Piper or Cessna, we all have our high wing or low wing opinion like Coke or Pepsi. But example, at the flight school where I was most recently, we had a number of post-production gap 172s. So we had 3 flavors. We had R model 172s. We had S models with basically the same panel with 20 more horsepower. Ooh, better climb rate in the summer, better cruise. And all I have to do is a paperwork checkout to move up from the R to the S. So those S models were popular, not to mention the S model G1000s as well. We did have some students who started on day one in just the G1000 model, the Skyhawk, and that's all they ever wanted to fly. Personal preference, that's fine. So if at one point we had 4 of those glass Skyhawks and now we have 2, there's a great vacuum to fill.
Right.
So
you've got to talk to people
right,
and sort that out.
Exactly.
But it can't be, it's got to be about the leaseback, not about your personal preferences.
Right, but of course the examples I'm giving, we've already gotten over the hump of, for all practical purposes, the make and model. Those
That's
are
right.
further details that you can use to even further refine the
Your
likelihood
choice,
of
right,
cash flow.
of good success.
But as I jokingly said, the idea of I want a twin, but there's no need for a twin at my local FBO or airport, you're just going to have to bite the bullet and at least target a make and model that has a likelihood of not spending its life on the ground.
You bet. That is important, and often a difficult hurdle for some owners to get past right at the start.
Right.
Not sure if we've got some questions that came in.
Well, one of the biggest questions we've seen is people want to know, early on we talked about not just you, but the idea that CPAs and or attorneys are entities that are going to be able to help me as a potential leaseback and engaged leaseback owner do this the right way, be effective, stay legal. What's the best way to locate one of these rare species of people, and how can AOPA help?
Well, the way that I see this typically is through the legal service plan. So if a member should come through the door and tell us that we've in fact got a lease, part of the legal service plan will involve us in our office, and usually me, reviewing the lease and having a preliminary discussion with the member. And then what we can do if they're in the process of buying an aircraft, which is often when they're thinking about the lease back, we can then, through the buy-sell coverage in the plan, go ahead and get the member referred out to local counsel. These local counsel are usually pilots, aircraft owners who are part of our legal service plan panel. So they can be very helpful. And again, we will, if you've got a lease that you'd like us to look at, we will look at it, get back to you with written and verbal comments if you want to talk about it on the phone.
Great. All right. So the real emphasis here regarding Q&A, as we're about out of time, is that so many, frankly, every sort of question that we get in this domain is so specific that the best way to really have any sort of effective conversation is to reach out and contact us. Phone call, email, either our Pilot Information Center where I work, and there's our contact info, or if you're a Pilot Protection Services participant, you can reach out to them. So we've got the contact info there. Mm-hmm. And Ray, thanks so much for being here to help educate our members on the ins and outs of aircraft leasing.
Thank you, Ferdi, and thank everybody out there.
All right. And to our viewers, thanks for joining us tonight as well. And with those questions you might have as part of your membership, you can contact our Pilot Information Center staff Monday through Friday at 800 USA AOPA. That's 800-872-2672. And you can also email your questions to us at pilotassist@aopa.org. Also, while you're here, please do subscribe to our YouTube channel here with the red subscribe button just below the video. And don't forget to check out more details on our Pilot Protection Services website here at AOPA, as Ray mentioned, at www.aopa.org/PPS. Or you can go on Google or your favorite search engine and you can search for AOPA Pilot Protection Services. Thanks so much. We'll see you next time.